Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Wednesday, January 19th, 2022. It's 2:48 p.m. Eastern Time as I'm starting the video, so I'll have enough time to do this. I wanted to get one out to you before the close today and do updates on some of the other trade ideas. They're definitely worth covering. As I always say, I'm a big proponent of trading a diversified portfolio or investing, if you're more using this site for more trading or investing purposes. So here's what I'm going to cover. I'm going to do a brief update on the markets, some of the market leading FANG stocks. I think that's just as important right now to look at those and watch some key levels, maybe set some price alerts. Again, whether you're a bull or bear, you want to look at these levels. Quick updates on gold, silver, euro, the US dollar, natural gas, all of which I've just posted my thoughts in the comments section to some of the recent posts today, so you might want to check those, and I'll go over it again. And then lumber, crude oil, and the ag commodities. I'm just going to talk on the ag commodities. I'm not going to go over each and every one because there's so many, and but I wanted to give you my thoughts there. Okay, so speaking of the comments, somebody asked, so what are your thoughts? And their interpretation of what I said was that I'm near term looking for near term upside and longer term downside. Not so much. To clarify, what I said is what I'm looking at is a likely failure to launch. I recognize the bullish developments. I recognize where it's support. You can go long here. Like I said, if you're a bull or even not a bull, you just want to go long with a stop somewhat below, and it's easy because that's a level. I mean, that's the thing about trading. You always hear me talk about not wanting to get into a trade, or people ask, hey, where should I get in? I missed this. I want to get in. When you're in no man's land, I don't like it. And no man's land is smack between when you have, let's say, support like T5 and T4. And this is no man's land right here in the middle. I like to get in close as possible. When you're on support, you can either go long, and the thing is, you can put stops tight. Now, you can go short or long here and have a tight stop, but it's random. When you get in the middle between support and resistance, you get those counter trend bounces, and it's hard to say, which way we're going to go. In fact, if we hit T5, probably won't be a straight shot down. There'll probably be some zigzags. But when you can step in and buy at support, or on the flip side, if you're bearish, you wait for a break of that support. Why short? Let's just say that line was super well defined. It's pretty good, but let's say it's 369.50. Why short QQQ at 369.60 when all day the buyers have been stepping in and defending that level, when you can just wait for a little bit more downside? You have a slightly less favorable entry, but a much higher chance of probability or that the trade will play out. And so that's my thought process here. All right, so what I'm thinking is going to happen, again, this is just on the 60-minute chart. If I wasn't allowed to look at daily or weeklies or anything else, I would say right now, if that's all I could trade, I'd be going long here. And look, that may be the play to do. I mentioned it one of these other times here. A couple of these bounces I gained with the, divergent lows there, but there's some of those I didn't milk the whole thing up, and so in hindsight, maybe I'll say, oh, that was a great place to go long. And again, you decide whether you want to do it. Okay, to be clear, my thoughts are that as nice looking as this setup is, it's probably going to be a failure to launch, meaning the bulls have already stepped in several times. And when I say bulls, I'm just talking to buying forces, the buyers. We've had a couple bounces off there. If you look at the daily chart, 1 minute chart, we zoom in. We were on the daily, or we were on the 60-minute chart. I'm sorry. Here's what we've done today. We've had a couple bounces. This is the open right here today. At the open, let me try to circle it. That yellow line. Here we go. Circle tool. They rallied it up, and then it got sold into. Okay, and then we're close enough. Again, on this 1 minute chart, we're still, for all intents and purposes, and remember, in the pre-market session, we were down here. They stepped in and they bought it up again, but look, they keep getting sold into. And now, the same setup I covered earlier is still there. We're still at the same level we were when I did the updates earlier today, and for the most part, where we were yesterday. See, there's yesterday's close. So what I think will happen is that I'm not looking to trade this upside. Again, I may regret that later, but I think they're going to fail, have what I call failure to launch, where we have such a nice bullish setup that it just fails to materialize for anything more than these very minor bounces, and then I think they'll take it out. So those are my thoughts. And where to, if we do bounce, if there's a little more upside, my answer to that question as well, I said, look, as far as upside the near term, it all depends on your near term definition. I'm looking at maybe hours to at most a day or two. And here's a nice gap from Tuesday. There's Tuesday's close. No, that's Wednesday. Yep, I'm sorry, Tuesday's gap. And excuse me, pause the video to cough. There's Tuesday's gap right there, and that looks like a nice place. And you can see so far, see there's where well, actually the top of the gap technically is right up there. There's our green candle. We closed there at the high. So the bounce targets, if we're going to have a little shallow bounce, it's right here from about 380. That's where this blue line is, all the way down to, because that's where we closed on Monday. And then we opened down here on Tuesday right around 374.50, right? And so far, if you zoom in on this 60-minute chart, there's the bottom of the gap. Officially, it's really at the top of that, the body of that candle, not the top. But this is where it seems they've come up. So each time that they've tried to get into there, this one they tried to enter the gap but got shot down, rejected. And then the next candle they tried, failed, right at the top of the gap, failed here, and so far that's where we're at. So this is what I'm referring to as a failure to launch. It still could very well play out, and what's gonna, be an early sign? Well, number one, they pop 374.50, more than just a brief pop into the gap and then a rejection. If they do that, you want to look for, technically, again, the top of the gap is around 380, so we'll call it that. But there's the bottom of that closing candle from Monday right there. And so this would be, if they get much above that, bullish, but look, there's still a mountain of resistance overhead. But if they do that and can do it soon, they're going to confirm these divergences. Remember, the PPO is trying to turn up here. It certainly looks like it's going to turn up, but sometimes you'll attempt a crossover and the PPO lines get rejected, or you make a crossover and it's just a brief whipsaw. So again, I'm leaning towards this, and the odds go up substantially if we can get down in there and take out today's lows. And again, the levels that I covered earlier. So I don't want to go too far into the markets. I just wanted to kind of clarify what I'm looking for here. And it's still anybody's game. In fact, the ball's in the Bears' courts right now, or the Bulls, if you look at it that way, because the Bulls have already defended this level for last at least all day today and yesterday as well. And all I got to do is step in now. And by doing that, it just means there's still a lot of willing buyers in this market, willing to step in and buy this dip. And if they don't, it just tells you the supply dynamics have shifted, that there are more sellers in the market, and then we're probably going to go down and take that next leg down. Okay, a quick look at the market leading stocks, the FANGs. This is Apple right here, and so here's what I'm watching. These are levels that again, it's anybody's game. I didn't mean to be wishy-washy with today's analysis or any of this. We're at support, and again, this is in a bull market, you buy, or bull trend. If you think we're going higher, you buy pullbacks to those support. And Apple has a level right here. You can see this is where the buyers have stepped in. We're there. So to me, it's simple. If Apple breaks that support, and of course all the other things that I'm going over as well right now, if just Apple breaks and the Qs hold up and every other stock or the majority, then that will be a whipsaw. But if we can break this, that's one check mark. Look at it that way. And the more these check marks you get, Apple's testing the 50-day moving average and support. That support level's at 167.55, right? So that's on the daily chart. We already had a sell signal recently. And I think that level will go. It's just, does it go soon? Or do we bounce a little more and then take it out? Or do we not take it out? Well, that's going to be bullish. If we don't take it out at all, I'm talking within the next few weeks, the market's not going to go very low with Apple holding up and remaining above 167.55. So you can set a price alert there if you want. Next one up, Microsoft, and here's a common theme. I've covered this one recently, and I gave you the other day these yellow lines. I had the trend line there, which has been broken. There's a check mark. So for the bears, that is. But we broke it. We back tested it perfectly from below, moved back down, but I gave you another line here before at 305.90, which is so far being defended. We had a slight dip below, and that's fine. We're right on that level right now. So again, I just showed you the two largest components of the S&P 500 and Nasdaq 100, both at a pretty decent support. It's moderate to more. It's not just a minor support level. A lot of reactions. Those are all-time highs. We had a breakout, a back test of that level, and we were back testing again. So to move much below there means the breakout right here to all-time highs at this level has now failed, and that's going to be bearish to take us all the way to at least 2310. So that's the second stock to watch. Amazon. Here's the story here. These stocks have been correcting mostly sideways now, if you want to look at it that way, moving sideways for months, and many of them, they're off their highs. But Amazon has levels, I need my circle tool here, right here. That line is at 31, 71.85. We're a little bit below it now. Not far below it, but a little bit below it. And again, I have a pretty big level down here at 29.43. But just for near term, we need to put that. So that one is starting to crack. There's one. But if the market can rally, if the NDX rallies and the S&P 500 rallies, that'll probably be a little whipsaw just like that one was. So these are the levels I'm watching here. I won't go over each and every one. Tesla, yellow line needs to break. Facebook, meh. Alphabet, there's a big one. 2661 right there, big level. I should have that colored up yellow because I think that will open the door to a pretty good sell-off if and when that's taken out. And again, in conjunction with the other ones that I just mentioned, because any one of these things breaks down, if the rest all hold up and rally, you're going to have inflows into the Nasdaq 100. They're going to buy the futures, they're going to buy the Qs, and that usually, not always, but usually will give a tailwind to the rest of the stocks in there. Nvidia, big level. Look at this trend line right here. That should be colored yellow as well. All right, so you guys get the point. I'm showing you, the market-leading stocks, big tech stocks. Cisco at support. Oh, and the semis as well. Semis, SOXX, starting to crack actually. This is the level that should be yellow right here, key level. And so these are the things I'm watching. That one has started to crack. So that's why I favor this thing failing here, and that's why where normally I might be long right now, I'm still short. Doesn't mean I'm going to be right, but that's I'm sitting tight and ignoring what I'm seeing with on the 60-minute chart based on everything I'm showing you here on the daily and that I showed you this morning on the daily charts of the indexes in the weekly charts. Okay, gold. I know I usually cover the futures, but I'm going to just quick update on the ETF GLD. This is a trend line I've had here for a while, and that one you have quite a few reactions. There was a little overthrow there at the all-time highs, but you have some distinct reactions since. So I think a breakout above that is going to be quite bullish. Somebody asked my thoughts on gold. I'm sitting tight on my precious metals. I like them for both diversification against my index shorts and other positions, and I also like the price action recently in the charts. First and foremost, I wouldn't be in something if I couldn't make a decent case to be in it. So so between that and that, you really have right here. Let me make that yellow as well. You really have somewhat of a triangle pattern there, and you also have a resistance level I've had here forever and a day at 172 right there. And so I think a little more upside could break us out and finally give us that breakout above that it's been at least over a year consolidation, what I consider high-level bull market consolidation. Only time will tell. Bears want to see that get taken out in the bottom of my buy zone. That buy zone, if you're just catching up or you're new to the site, ever since we topped here and I suggested getting out of long-term, trend and swing positions in gold and silver and the metals and miners and or shorting those, I had a buy zone that I'd be interested in getting back into those long-term positions here. And we hit the bottom of the buy zone 2 times there when we've had several dips into it. And again, you just have to be patient with gold. It's not paying you dividends if you're trading at the long game, a long-term trend. You got to give it some room. And we've had plenty of swing trading ops, long and short, since we've been in this consolidation range. And I'm going to get to that in a second in commodities too, the ag commodities. I think it may be, we may have had enough consolidation, bull market consolidation, that we could be looking at the next leg up soon. But again, I'll get to those in a second. But look at the weekly chart. Here's that triangle pattern, nice and clean, right? This is there's your triangle. So that's what gold GLD needs to do, is break out there, and then you're going to run at the old high. If we even get close to it, I think maybe some reaction, but we could just blast right on through there if this triangle pattern breaks out. There it is right there. Futures for you, GC. Here we go. We're just peeking our head above that 1840-ish, 1840, 69 or so resistance level. To me, it's been a pretty big level on the futures for a while. I think, if I'm not mistaken, I can only go back on this time frame. If I change time frames, it's going to lose the annotations. I think we might have had some more reactions to the left. We had this little whipsaw, false breakout, and that failed because it had divergent high. It had a little bearish wedge there, broke down, put us back into the range. But for the most part, there's been whipsaws through the top and bottom, but this, this colored area here, that's about the recent multi-month. We've been trading that range for a while, so that's it, guys. If we can pop that with conviction, I think we can run, and we're a little bit above it now. Normally, I might try to game a short trade pullback. I have no, and I mentioned it to somebody in the under the Q&A or the comment section on the last post. I'm sitting tight. I don't care if we pull back here. As of now, the charts are looking constructive. There's a little trend line maybe you could use in gold, but there's still plenty of support below. I'd rather sit tight and not get shaken out and miss a breakout there that could just run. So I like the price action recently. And silver. Silver took out that 2380 resistance target with conviction. Look at that, well above it. I could certainly add a little resistance level right about where we are based on these reactions here, here, and here, and here, and here even. Probably go back as well there. There's quite a few reactions. It's at resistance. Let me add that level right there, just like gold. So if we can power through a little bit more, and that's the thing about gold and silver. When they want to run, they can really run. And so far, remember, guys, I pointed out this the other day that we had an uptrend line, and we also had the euro and dollar hit my target. So I expected a reaction or reversal on those. We got it, and that caused us pullback. But just as I suspected before it even happened, that pullback would be very minor, and I didn't care to leave my positions. And you can see that they broke down where normally, based on the drop in the euro and the rally in the dollar, you would have expected more downside, but the buyer stepped in aggressively. I mean, look at that. They just busted out nice bull flag here on gold. And again, I'm just liking the price action. There's a bullish pennant, flagpole, breakout at resistance, and same story. If we can power on through, that's going to be bullish. And then the euro still above that uptrend line here, moving higher. This is well, there's your line there, moving up in this price channel at the bottom right now at support or just above it. Yeah, you can look at a glass half empty or glass half full. Maybe that's a bear flag. You watch it, because there's an impulsive move down a flagpole. If we break down, bottom line is we need to hold that trend line there. If we do break down, it could send us all the way back to that 112.54 level. And I'll be honest with you, that still keeps the euro constructive. It just keeps us in this trading range. That was the bottom of the trading range, 112.54 right there. Lots of reactions. So anything much more than that is going to be bearish. It'd be all the better if the euro could power up. We already hit my 14.95 target to the button. Power up, take that out, and then move on up to the next targets here. That's going to help gold and silver. But remember, although the gold usually rallies and silver rallies with the euro, not always. Sometimes the euro can be heading down and they can rally if there's just enough buying pressure on gold and silver, regardless of what the currencies are doing. And then the US dollar, DX, dollar futures, remember it's basically an inverse chart of the euro. And we rallied back, and I had the bottom of that support zone or resistance zone, because we're below it, was the top of it's 95,784, and we hit that, and so far rolling over. So if we could get a little more downside, and there's a little minor trend line there. Want to see the dollar. This would be ideal to see the dollar have another run down. We already hit my 94.50 or 94.60 target right here. And so therefore we could just move right on through there and go down to that next target, 95.505. If that happens, that's going to be a continued tailwind for the gold and silver trades. However, just like the euro, the dollar may want to run up here, and ideally for the gold and silver scenario, that is, it should be capped. Any rally, any upside should be capped by the upper end of that trading range around 96.64. Okay, and catching up on the comments today, I realized I left that video out yesterday. I'm sorry, as I said, I cut out. Wasn't feeling well and forgot to include the link. Sorry about that, guys. So it's there. Hopefully, you found some of the stuff still timely. Somebody asked about UNG today, and so I give them an update. This is a daily chart. It broke this uptrend line that we had on nat gas futures and UNG, so it's probably going to take us down here, is what I said, to 1321. Primary trend is bearish. See the signal line right here, the PPO, I mean, there's a zero line. When you're above it, it's bullish, so we're bearish, and we're back testing from below. So if we can pop above there, if we can hold that support, that would be bullish for natural gas. But if we get rejected here on this daily chart, not so much. So that was a daily chart, and then I also posted the 60-minute chart. 1330 about is where I have this pullback going to in natural gas. Again, this was from earlier today. I'll give you the updated chart here in a second. So you can play a bounce trade buy nat gas at 1330. If you're in it or want to get in it or whatever, that's where I think we should hold with a stop somewhat below. Actually, I haven't even looked at it since then. Let me see where it is right now. UNG, and then I'll get to nat gas futures. UNG 60-minute. There we are, coming close to it now. 1345. As I do the video right now, and that's what it looks like. So it's that same uptrend line I showed you there, and that's what it looks like on the daily chart coming up. Remember, it was a long trade idea on a break above this consolidation range recently. So we had that big pop, ran into this 1587 resistance, and coming back down 1321. I think UNG has a buy there. Again, I'm a little concerned about this, but I'm more so, I'll buy support all day long. That may cross over, even if it doesn't, good for a bounce trade. Go long at 1330, maybe down to 1321 with a stop a little bit below that and let it ride. As far as the futures go, on the March contracts, I had this was the breakout level I wanted to see get taken out for that last long trade, and it did. It ripped when we took that out. But I also had a resistance level there at 3.859, and we're right on that now. So you might want to step in if you like that UNG trade, if that's what you trade. Step in there because there's some support. We could go a little lower. There's certainly support a little bit lower here as well. Let me give you that level. And that would probably coincide with a tag of that 1330-ish level on UNG, about 378, and that's these reaction lows and that reaction high, and there's a reaction, actually a lot of reactions there. So yeah, I'd be a buyer from here down to 1378 with a stop somewhat below. Somewhat is relative. Natural gas, please guys remember that I beta adjust all my position size and recommend you do the same. What does that mean? Well, natural gas is not unusual to see it in a single day go up double digits. That means 10% or more. Today alone it's down 5%, and the other day it was up 10%. So therefore, you're not going to get a 5 or even a 10% down day in the S&P 500. It's extremely unusual. The circuit breakers are hitting all that, and it's diversified. Nat gas will. So if you're going to trade nat gas and you trade, let's say, the S&P 500, and your position size is whatever it is, 50,000 or 5,000, doesn't matter. It's all relative. Let's say it's 50,000. Then you want to trade 10,000. 15, no more than that, in natural gas, because the moves and the swings, the daily moves are 5-10% plus many days. Not every day, but many days. And then the trends are, the quick trends are 20, 30, 40% over a matter of days, weeks, or even maybe a couple months. So therefore, you don't need a lot, in other words, to make a lot. And if you keep your position size small, a 5% drop isn't going to wipe you out. You have a full size or oversized position, you take a 5 or 10% drop in a day, and your stops weren't set in place or whatever. And again, more importantly is to trade this successfully, you have to give it room. You can't run a 3% trailing stop or a 3% hard stop on nat gas, because you're going to get chopped or stopped out in the daily grind, the back and forth, because of that volatility. So the key is smaller position size. It allows you to use wider stops, and you're also going for above average gain potential. And lumber has triggered that sell signal on the break of this uptrend line. This is a 2-hour chart. You could replicate the same thing using an hourly chart, but I'm looking at 6 months of history, 2-hour candles. Big divergent high. We did have a trend line break there, but we didn't have divergence. You had a higher high here at the time. You had, oh no, I'm sorry, you did have some PPO divergence, but not RSI divergence. Now you have both RSI and PPO divergence, and that is a bearish rising wedge, and that is a breakdown. AK sell signal targets 178.55, 101.77, unadjusted actual support levels, 984, and then I think we can work our way down here to 861, 862 we'll call it. So that's LB lumber futures. There are no ETFs that directly track lumber to the best of my knowledge. And you most certainly want to beta adjust this one as well. Also, to the best of my knowledge, there's no micro contracts. I talk about just about every other, other than the ag commodities, all the other commodities I frequently cover, the futures, I'm sorry. That's the index, stock index futures, oil, natural gas. A lot of those have micro or mini contracts. They're the same price levels of the charts that I cover on the main contracts like NQ, ES, CL for crude futures, NG for natural gas, but the mini or micros have a smaller leverage factor. So you can trade those. Lumber, also to the best of my knowledge, does not have any micros or minis. Again, if I'm wrong, post it under the comment section. But there's the bearish rising wedge. I know that be easier to see it in darker color. Right here, this is what we're looking at. And this is a daily chart, by the way. Steep bearish rising wedge with negative divergence. This should be broken today. This is an end of day chart. When you go to stockcharts.com on their futures, they do EOD or end of day, so it won't update till after the close. But we should have a sell signal there on the more significant daily chart, and that could take us all the way back down here at about 850. Whether that happens or not doesn't exclusively depend on what the market does, but largely does. I think if we get that big, break of support I'm talking about, and a big drop in the market, stock market, we'll see the hot air come out of this the lumber futures and could swing down, and that would be I think, what is it, maybe 30%? Let me see where we're at now. Get there, 35% drop from where we closed yesterday, if that level's hit, which is about 835. And crude oil looks a lot like lumber. You've had these divergences building here. Let's color that one up yellow. You have divergences, negative divergence that is, building there on the indicators. You have a primary uptrend line right here, and then I have a little minor trend line right here that's catching the recent lows. So if we can pop that, and again, this one is largely but not exclusively dependent. It's actually powering up the new highs with the market starting to break down. This one, you'll get, I believe, more bang for your buck. You also have to adjust your position size down, because crude, also like natural gas, maybe not as volatile, but darn near, can really run and fall fast or rise fast, especially when you finally get a correction. It tends to fall very fast. So those are your levels. Break the trend line, and then a break back below 83.25, or you want to be safe, call it $83, will mean a false breakout, and that's a breakout of the previous highs right there, and I think that'll send crude down hard and fast. So that's a setup at this point in time. We need to see these the trend lines and then 83.25 break. Okay, I'm just end it here with the ag commodities, and I'm not going to go over each one. Those are the agriculture commodities. You guys know I trade corn, wheat, soybeans, coffee, cotton, you name it. If you can trade it, if you can chart it, I'll trade it. Now, for a while we've been in kind of hit and road. I'm sorry, guys, still not feeling too well. Hit and run mode, meaning in and out swing trading. And what I've noticed lately is we've had several short trades on various ag commodities, including coffee, put in a divergent high here, and then it broke that next level. Then it broke the trend line here right there, but actually at the time I did point out we had a bullish falling wedge, and therefore I said either go long or cover up your shorts if it breaks out, and that was right here. And we did. We broke out. But so maybe not the best example because I did lay out that wedge back there, and we've been moving higher. But what's happening is I'm noticing now the corrections are getting bought up pretty quickly, and these trades aren't playing out to their deeper targets that I'm giving. And so, in other words, there's a lot of buying pressure, and maybe the again, I'll have to do a separate video. But a lot of the ag commodities that I've highlighted, the short trades are getting bought up pretty quick. We're hitting usually our minimum targets, and there's I think the herd has been slowly and shifting in realizing the stock market's getting frothy. Let's take some money off the table. We know money's coming out of tech right now. We know it's coming out of financials, a lot of other sectors, and it's going to find a home somewhere. Still not, you're not getting squat under the mattress, and you're only getting a hair more than squat in the bank right now. So, that money's only going to sit in money market accounts at 0.3%, if that, for so long. And so my point is, commodities, we are in an inflationary environment. Yes, the Fed's going to start tapping the brakes, but in my opinion, as well as some others, the Fed is still extremely and historically way too easy for where we are based on inflation numbers and what the real rate of return is right now, inflation adjusted returns on treasury bonds and things like that. So we should be a lot higher on the Fed funds rate at this point and where we're at. So anyway, so they're going to hike, but the cat's out of the bag, and like they always do, they're too late, and we'll see. We'll take it day by day. I just wanted to say that the commodities, it may be time to start re-entering or looking at that into some of those longer term positions, just like gold and silver. We could break out and resume the bull market, get the next leg up soon instead of this a month or year long consolidation phase that we've been in. So that will be in another video. I'll cover each one because they certainly trade to their own technicals. Coffee has very little to do with wheat, which has very little to do with hogs, or cattle. So all right, we'll wrap it up here and get the video out to you guys. Oh, one more before I go is Bitcoin, because I keep forgetting to update that, and I keep meaning to. BRR, Bitcoin futures. There's a trend line. Nothing's changed. I highlighted, I liked it back here. We hit that buy target right here, ideal buy zone or support level 41,484. A little brief dip below. We had positive or bullish divergence, which are still intact now. Other than this one minor little whipsaw, it's a pretty well-defined, fairly well-defined trend line. So boom, we need to pop that, and I still maintain these targets. I still like it right now. I'm not crazy about it because it's kind of a failure to launch so far, but we've held above that 41,484, and so really, if you're in it, you want to hold above those recent lows right here. I'm sorry, I'm making a mess. Or add to it on a break of the trend line, and then target 45, 48, 167, and then ultimately this is my near term or preferred swing target zone up here right there, about 52,370 to 53,528 right now. Let's just see if we can get that. Ditto for Ethereum as well in the buy zone. These guys run together. So all right, I will wrap it up here. So I can get the video out to you guys before the close. This has been Randy Finney with Right Side of the Chart. Have a great day.